You were listening to chartingwealth.com for Friday, the 13th of July, 2018. Do not forget, our book is for sale, and if you buy the book, Charting Your Way to Wealth, you will receive on the 15th of July or thereabout. We're going to be sending out our short chart trading primer. It's going to be a video just for our special friends, those who support us by buying the book, Charting Your Way to Wealth. If you look at the right-hand corner of your video screen, if you're actually watching the YouTube version of the daily review, you will see a link to a video about the book and how you can purchase it. Also, you'll see at our YouTube channel under the show notes every day, along with the emails that we send out and the notes of the daily review at our website, chartingwealth.com. There's links there where you can purchase the book. But you're going to have to purchase the book before the 15th of July, and that's just a few days away, in order to be on that special list to receive that special training. So let's jump into these charts and see what's going on. S&P 500 and the Nasdaq 100 both up for the day as markets climb. We see 20-year bonds just barely down, almost flat, 0.01%, so 0.1% down, hardly. And we see gold up 0.42%. Let's first jump into the S&P 500. By the way, we're back from our trip out to the Grand Canyon. Had a fabulous time. We were able to get all of our shows out to you. You notice some of them were late. Thank you for your patience. We see the price percent oscillator bounding off the red signal line. Thought we might have a crossover the last several weeks. Has not happened. In fact, the market really sort of slid along for the past 4 or 5 weeks, up a couple, down a couple, sideways pretty much. But we see things bounding up quite strongly with what appears to be shaping up to be a decent candle. Again, up 0.91% for the day. Derivative oscillator, if we zoom in really close, yes, gaining a little bit of energy so far for the week. Price percent oscillator, like we said, bounding off the red signal line. Nice green open box candle. What do we see on that 2-day chart? Well, we have a crossover. Well, it actually did sustain itself there after crossing over on the 11th. So far, the first day of the latest 2-day candle, we see the price percent oscillator heading up strongly after the cross and the derivative oscillator turning positive. And again, we've got 4 up candles, really 3.5, because the latest is only the first day of the latest 2-day candle. So we've got 7 up days so far. And then we go to the 4-hour chart. What do we see there? Well, we see the price percent oscillator spiking up after up movement in the morning and the afternoon. However, derivative oscillators continuing to lose momentum. So keep our eye on that. Now, again, for us to jump into an up trade, we will need a rollback and crossover. We talked yesterday about some of you perhaps playing with when the candles went back to green. Would that be a jumping in point? Can be dangerous, but at the same time, we do see the price percent oscillator heading up again. This is our smallest chart, so it's the most likely to be subject to fluctuation since it's the little wave. Remember, we look at the market as waves of fear and greed running through whatever the ETF, stock, commodity, whatever it might be, or baskets of stocks like an index is. And of course, we see those big waves, of course, are less affected. It takes a lot of little movement to move the bigger waves. And of course, our smallest wave that we typically look at is the 4-hour chart or 2-hour. And then the medium-sized chart is the 2-day, and the large chart is, of course, the weekly. So we see things spiking up at the end of the day, and we'll see if there's a pullback and a potential jumping in point. Back to the weekly, on to QQQ, up pretty nicely, 1.72% for the day. Have a nice big green up moving, we have a nice big green up candle. In fact, it's probably the biggest that we've seen. Looks like it's about the same size as the one for the week ending the 8th. And maybe that's the 8th of June and the 11th of May. But again, nice up movement after some down movement over the course of 2 weeks, and then a sideways slide, a green spinning top the last week ending the 6th of July. So it's nice to see this big green up candle. Derivative oscillator still losing some momentum. Price percent oscillator heading up. What's that 2-day chart up to? Well, of course, it's bounding up going into the fourth up candle. Of course, we look like we're probably going to have a confirmed crossover going up unless it's a big down day on Friday. The price percent oscillator crossing over derivative oscillator going green at the same time. And of course, that will switch over the 2-day chart, which had otherwise been in a confirmed down move. And we see the price percent oscillator on the 4-hour chart continuing to move up. Derivative oscillator losing some momentum. Again, price movement up in the morning and the afternoon on Thursday. And of course, well above the weekly trend line. So we'll continue to keep our eye on the prize and see how things develop. Okay, next we're going to go to 20-year bonds. What do we see going on there? We want to make sure we start, as always start your analysis with the weekly chart. And of course, that weekly chart is moving up. We had a weekly vertical crossover back on the 25th of May. Big up week following that, sideways slide for 2 weeks, and then things started moving up in earnest back on June the 22nd. We're going into our 4th week of up movement. However, things are sort of petering off. If we have a green up candle, but if you notice where the price is, about the same as the prior week. Derivative oscillator still gaining energy, which is a good sign, and the price percent oscillator still heading up. But that does give us some concern. Let's see how that plays out as we continue to analyze what's going on the ETF. That's where we can really see things topping out, going all the way back to about the 27th, Wednesday the 27th or so of June. And we see things sort of hitting the same point over and over and over. Price percent oscillators pretty much flat on that 2-day chart, first day of the latest one. Derivative oscillators losing momentum. Then we take a look at the 4-hour chart. What do we see? Well, that 4-hour chart's still underwater. We're waiting to see if it's going to cross over going up, and if it does, as long as our 2-day and weekly still stay in confirmed up moves, we'll of course have a jumping in point. So keep your eye on things, and if you see that 4-hour chart crossover going up, again with the weekly and confirmed up moves and the 2-day, you can, of course, jump in and ride that pony. Whenever I say that, I always get interesting comments from you guys, but that's what you do. So that's where we are. Let's change, and again, on a virtual trade. We're not a stock calling service. We're an education firm. Lastly, we have gold. Gold, of course, has been in a confirmed down move all the way back to about mid-March. It really tracked up and sideways for a while and started going down in earnest starting on the week ending Friday, the 27th of April, and has been going down pretty much since then, except for really 3 weeks, this being the 3rd of those weeks so far. We have, excuse me, have what appears to be a green spinning top. Price movement up 0.42% for the day. Derivative oscillator still gaining downward momentum. Price percent oscillator still headed down. We look at the 2-day chart. What do we see? It's flat, losing downward momentum on the derivative oscillator. Price percent oscillator is flat. Candles are still moving down. Price movement still below the weekly. And of course, once we draw this latest 2-day candle, if it ends up still being red, we'll redraw that. So we have another trend line to follow. So again, both the weekly and the 2-day headed down. What's going on the 4-hour chart? Well, it's trying to cross over, going down, pretty much laminated right now because the up moves in the morning and the afternoon. Not a lot of strong up movement, but some. So keep your eye on gold. Derivative oscillators already trying to lead the way on a down move, but when you actually see a rotation over, if you don't have a bounce off the red signal line, if that blue signal line does cross over going down, then of course you can look at shorting gold. Folks, that's where we are as we end the day on Thursday, going to Friday the 13th of July. We so appreciate you. Again, you want to help us out, purchase our book. You will not regret it. You will find it of great value to in understanding all the things that we talk about and do here. In addition to that, you'll also get that special 2-hour short chart training. That's on the 2-hour chart. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.